A very good morning and warm welcome to Money Sense. Hosting with me, Simon Caudry, this morning is Emil Kalinowski. Good morning, Emil.
Good morning, Simon.
We are delighted to be joined in the studio this morning by a distinguished author and commentator on economic and financial matters. Samir Samal is a CFA charter holder, entrepreneur and businessman, and co-founder of Blue Ocean Global Wealth. I hope I have that right. One of the most important matters in finance today is financial literacy. And Samir is an accomplished writer and presenter on these topics, and we are genuinely delighted to have him with us here in the studio. So Samir, without further ado, first of all, welcome to Cayman and welcome to Money Sense.
Thank you, Simon. Thank you, Neil. It's a pleasure to be here.
We also have an extra guest with us this morning, a guest host almost, Marcelo Suarez, who is a board member of the CFA Society Cayman Islands and Director of Institutional Asset Management at Scotiabank. And Marcelo, thank you for joining us, and this will not, we hope, be your first and last time. So thank you for joining us.
Thank you very much, Simon, for this invitation. A pleasure to be here with you.
Great to have you, and thank you for being the coordinator of bringing Samir down to the island and having the event that is obviously has just taken place at the Marriott, if I'm not mistaken. So let's start off perhaps with some basic introduction. Samir, tell us a little bit about why you're here in Cayman. I know I said that Marcelo's brought you down, but what's he brought you down for other than hopefully sunshine and margaritas?
Well, Simon, first and foremost, I'm an educator and I'm passionate about sharing information to help others make the most informed decisions. I was delighted to accept an invitation to address the CFA Society of the Cayman Islands, and I spoke about the new networking, building relationship capital. How do you do that online and offline, specifically for investment professionals? And we covered, Simon, the importance of using what you know to improve who you know, and using who you know to improve what you know. And ultimately that leads to who knows you. And relationships are so intangible. How do you measure the love you have for your family, your parents, your children? How do you measure trust? How do you measure the ability to communicate effectively? And so these intangibles ultimately drive success in life. And you couple that now with social media and the emergence of the internet. Isn't it ironic, Simon and Emil, that technology brings us close to people far away, but sometimes takes us away from those sitting right next to us? Like when we go out to a restaurant, we see a family all on their cell phones. So we discussed, how do you use the internet to get off the internet? How do you follow up? And ultimately, how do you build better relationships?
And what's interesting about what you're saying about building relationships, you can build relationships in so many ways. You can build relationships with people for social reasons, but also you can build relationships in order to be a better educator and a better communicator. And obviously the topic that we're talking about today is about financial literacy and about how to improve people's understanding of that. And it's no good having great ideas without having great communication about it. So those two things are intrinsically linked in many respects, I'm sure.
Absolutely. It's the difference between, of course, theory and practice, and we're ultimately a function of who we surround ourselves with, and we learn as we teach. And that's why I'm certainly honored to be able to share perspective through the CFA Society and be able to help others make the most informed financial decisions.
Excellent. Well, let's kick off without further ado. Let's talk about financial literacy, financial planning and such like. And I suppose going to sort of the first question, financial literacy, what is it? It's such a, when I think of the two words together, financial literacy, finance means almost anything in this industry, and literacy, it doesn't narrow it down to, or does it? How do you narrow it down? How do you define it?
Well, I think ultimately defining it is something that is going to be for the individual. But I think most people, they know about saving for their financial future. They know it's important, but they're not necessarily clear, Simon, on the steps to take in order to accomplish their goals. I think as inventor Thomas Edison once said, good fortune is what happens when opportunity meets planning. So financial planning is the process of meeting your life goals through the proper management of your financial resources. And these goals could be purchasing a new home, perhaps saving for college, planning for financial independence, perhaps taking care of other loved ones. And it's important to know that financial planning and financial literacy is a process. It's not a transaction. It's not something that you do and simply check a box and say, hey, I've done that. There's not a single segment of our lives that is not affected by financial planning. And I think the goal really, Simon and Emil, is to adopt a big picture integrated approach to your personal financial situation and goals.
And I guess when we think about financial planning, financial literacy, we think about how those people who are investment professionals go out and do it. And we think about, perhaps the big banks, perhaps the other investment management companies on Ireland. And yes, of course, it's inevitable that firms will go out and want to make money, they sell product. But of course, a lot of this done properly is to the benefit of the individuals who are the subscribers of those products, the users of the product, but done properly through proper education of people so they understand what it is they're being offered. That's a crucial element, isn't it? You can't just go out and have people going out selling stuff. You need the consumers to have an education, you need the consumers to have a knowledge base. And I suppose the fundamental question is, how does one go about educating people about what are intrinsically complicated subject matters?
Well, I think you would take the Lincoln aphorism first and foremost and walk slowly and never walk backwards. And first and foremost, when you're addressing a group of people, you're going to get people with all wavelengths of competency. And so it's important to start at a base foundation. For instance, the basics of financial literacy would include something as simple as having a budget. Are you accounting for income versus expenses? On the other end of the equation, you can have very complex financial concepts. Like, for instance, our friend Marcelo is involved in working with institutional investors and high net worth clients where people may have businesses, they may have tax issues. And so financial planning is unique to the individual. And that actually is one of the challenges, Simon. How do you ultimately create a clear and consistent message without alienating people in the process? And that's an ongoing challenge that I know firms like Scotiabank and, of course, CFA Institute lead in.
And it raises an interesting question in my mind, which is the following, which is a lot of people who I speak to say, well, I'm perhaps not sophisticated enough in finance to understand financial concepts, and therefore I'm not going to bother trying. Mm-hmm. But it's surprising with clients I've dealt with over the years, even perhaps some of the most sophisticated who you may think are the most sophisticated, they also are incredibly naive about some of the basics. So there is a point here, which is that people need not be shy or shouldn't be shy about admitting what they don't know. And that's something I think perhaps isn't done enough. What's your response to that?
Well, I think an investment in knowledge pays the best interest. No pun intended. I think you need to have an open mind about anything. And I think the details and small steps ultimately compound to much larger decisions and real outcomes. And I think that you need to work with financial professionals and firms that are going to take the time to explain complex topics or the importance of all these elements of your financial life and how they ultimately mean that you can make better decisions. And that's going to make a big difference in your ability to see clearly and have what I think is most important about financial planning and financial literacy, Simon, and that is peace of mind.
You just in your answer to Simon there, you mentioned working with firms. And I imagine also working with professionals such as yourself. One of the bullet points that Simon didn't mention, but you're also a certified financial planner. How, if somebody doesn't have it within them, the interest to want to budget and plan because they're just talented in other aspects, they need a certified financial planner, a partner. What should they look for in someone to help them navigate financial planning?
Well, I think to bring back first off Simon's point, I think it's okay to admit that you don't know everything about financial planning or financial literacy. And that's why there are world-class professionals. I happen to be honored to be here in the Cayman Islands where there is a concentration of people that have a great deal of expertise and are able to ultimately help consumers, families, professionals, entrepreneurs make the most informed decisions. I think when looking for a firm or an individual to help you stay on the road to financial independence, to protect wealth, I think you need to think about some questions in choosing a financial planner, a wealth advisor, and an investment manager. And some of those would certainly start with, what experience do you have? Tell me a little bit about your qualifications. And I think the CFA Institute and CFA designation being the gold standard in finance, as mentioned by the Financial Times many times over the last decade, is important and certainly atop the list of qualifications, but also asking their approach to financial planning. What types of clients does someone work with? Do they have experience with the unique nuances of your business or your situation or where you might have wealth in a particular tax domicile?
Is there any age that's too old or too young to start learning about financial literacy? Presumably someone has to be literate and able to read and understand, so perhaps not babies. But is it a fair argument for someone to say, I've worked for 30 years or 40 years. It's no point me starting understanding finance. No point me starting worrying about saving now. Is that a fair argument, or is that really quite mistaken?
Well, I think there's two cases there. One, there's people who maybe didn't have any time to devote to learning about their finances, and they were so busy accumulating wealth, they felt like they couldn't spend time to understand it. So I think that some of those people are able to take a new approach in being able to learn a little bit more about making informed financial decisions. There's also people that say, hey, you know what? I want to entrust a financial planner and wealth advisor and company to manage my finances so that I don't have to worry about it. And I know that this person is well qualified, has been able to help perhaps friends or family, and I don't want to necessarily get involved. And so, Simon, that's a great question, and it's going to depend upon the individual. However, I would say that it's never too late to get a better understanding of your finances. And I think sometimes people have worked with perhaps a financial professional that didn't explain things in a way that they understood, or because there's so many elements to one's financial life and there's almost choice overload in terms of products, people, and firms, that they were a little bit intimidated to get started somewhere.
I think that's an important point in your word, intimidation. And I think too many people are too shy to admit their ignorance on this subject. And even if you are of an older generation, you can, by learning a little bit more, help somebody in your family who's of a younger generation grasp the concept, otherwise they may not. And that might make a substantive and fundamental difference through the rest of their life. The difference between 1 or 2% return compounded over 30 years, and we can talk about that a little later, is material, and it's huge. And just those small changes, it's like nudging someone to do the right thing. Who was it who wrote that book about nudges? Do you remember, Emil?
You've caught me off guard. I don't.
But, pardon me?
Richard Taylor.
Oh, he won the Nobel Prize for economics, did he, for that as well? Yeah, well, there you go. Marcelo
Thank you, Marcelo.
Yes, indeed. So let's tilt the conversation and move into some nitty gritty about the impact of financial literacy. And we led into this, but what are the implications to somebody of not doing a good job, of not paying attention? What happens if what are the expectations that someone should have if they do spend time learning and don't spend time learning?
Well, I think if you don't spend time learning, you're going to be in a situation where perhaps you're climbing the wrong ladder to get to the top of the wrong building. You're spending time allocating your wealth in certain places, and ultimately it's not going to do the things for you that you want most. Perhaps it's spending time with family outside of the country. Perhaps it's gifting, and there's causes that are really important. And unless you take a prudent and managed approach and proactive approach to your family's finances, you're ultimately not going to accomplish your goals potentially. Conversely, I think creating a financial plan helps you see the big picture and establish long and short-term life goals, which is really a crucial step to mapping out your financial future. And when you have a strategy and a financial plan, and perhaps Simon, Emil, working with qualified professionals, it's easier to make financial decisions and stay on track to meet your goals. Working with the right CFP professional, CFA charter holder, is fundamental to your financial well-being and success. And the experience should provide peace of mind, insight, and clarity into relating your life goals to your personal and family's evolving financial picture.
Look, I think we're going to have to take a short break. We are almost halfway through the show, and as always on this show, we take a quick break, go to our sponsors, and then we'll rejoin with Samir to talk about financial literacy and financial planning and these general topics in about 60 seconds. So join us back in 60 seconds. Welcome back. In the second half of today's show, we are going to continue our conversation on financial literacy with Samir Samal. Samir, again, thank you for joining us. Just before the break, we were talking about some of the challenges or issues that people have if they don't pay attention to the importance of financial literacy. And I think, Emil, you have a question which links into this. And so let me pass over to you.
Thanks, Simon. Yes, Samir, if our audience is listening right now, and if there was one thing that is perhaps the most common problem that you come across when it comes to financial planning, what is the issue that is perhaps the most common stumbling block when it comes to financial planning?
Thank you, Emil. Great question. When you think about financial planning, it's a total approach to your financial life. So one of the biggest challenges is having a silo-like structure to your finances. For instance, if you're just looking at your investment portfolio and you're not accounting for taxes, for instance, ultimately what's going to matter is your net after-tax return. or you've done really well in your business and you've even worked to transfer wealth from your business balance sheet to your personal balance sheet. But an unexpected accident or situation happens and there's no insurance in place for a buy-sell agreement or life insurance to protect your family. So financial planning oftentimes gets misconstrued or grouped in with portfolio management or investment management, when financial planning covers your entire financial life and maybe looks at where you have some blind spots.
Simon?
Well, that I think is a crucial point, isn't it? It's a holistic point, and you need to think very broadly about your lifestyle. It's not just about basic numbers. It's about how you're living your life and how you want to live your life as well. And we can go in future shows and talk about some of the detail, whether it be compounding or net present value, some of those details. But what do you think? I guess going on the same theme, perhaps that Emil was on there. What sort of ideas or issues are there that can be helped through different policy actions? So we talk about what an individual can do, but perhaps what I'm interested in also is what can governments or policy makers do to make a difference? Are there things that can be done in that regard?
Absolutely. And when you look at different countries around the globe, there are governments that are involved in that, and there are some that are working towards that. I think first and foremost is that ultimately people are motivated by self-interest. Richard Dawkins and The Selfish Gene, one of my favorite books. And so how do you limit compensation and make it so that an investment professional, a firm, an advisor is not motivated by the commissions or compensation they're going to receive, rather than doing what's in the client's best interest? And that is, of course, easier said than done. And that's why there is regulation. And, too much regulation, I would say, impedes providing the very best financial advice, but not enough financial regulation allows people to maybe veer off the path of doing what is ultimately in a client's best interest. So I think that's one area that is always going to be an interesting subject. How do you balance compensation and rules in place so that people ultimately try to do what's best for their clients and it's genuine? Another key component, I think, of governments and regulatory framework is this notion of experience and designations. One of the challenges in the United States is they call it the alphabet soup of financial designations. There's so many of them. And how does the aging population in the United States, Simon, Emil, Marcelo, how do they ultimately determine that, this designation actually means something more than another? For instance, the CFA is a very rigorous program. It takes 3 different exams. First one's offered twice a year, the second once a year, the third once a year, versus another designation that also has chartered in it, chartered senior financial analyst. How do you ultimately make a differentiation to someone who's thinking about entrusting their life savings or portfolio to someone? So that is an opportunity. And I sat on a roundtable at the Consumer Financial Protection Bureau where we discussed that. And that's why I'm a big advocate of CFA Institute and the CFA program, and also, of course, of CFP Board and the Financial Planning Standards Board.
Well, I wish I'd set you up for that question, because I love the answer, and it allows me to editorialize, which I know is a bad thing to do, but to do so for about 45 seconds, which actually goes to the heart of something which I think is important. You talked about the importance of regulation, allowing people to understand who and what a qualification is, and the importance of regulation to ensure that people are addressed by people with experience and competence. And that's something I really would wish that we would have a much stronger level of here on the island, because we don't have regulation with respect to what people are supposed to have in terms of qualifications when they go out and deal with consumers. And I think that's a travesty, and I think that needs to change. And so I thank you for bringing that up. I will take issue with you at one point, which is you referred to an aging population and then looked at both Emil and myself first, which we find, I don't know, we're not that old, are we, Emil?
No, Simon.
Just, I suppose, another matter that links into what governments can do, though, and this is something that I think Marcelo wanted to talk about, is schooling. So perhaps you want to address the schooling matter and ask that particular aspect of this topic. So let me pass over to you on the schooling matter.
Thank you, Simon. So I have a question for Samir. This is a very essential topic for societies around the globe. And this comes to the topic of financial literacy. How can we encourage financial education in young people. And I'm talking about schools, not only universities, but schools. Various subjects that are taught in schools are usually in the liberal arts area, like the sciences, physical sciences, social sciences, the arts, the mathematics. But I hardly ever see a subject on home economics, financial budgeting. Basic financial concepts. And it's very common to see professionals at a very, I would say, mature age that lack those skills to manage their own business and their own finances. And I just think that every professional needs to know how to manage their own finances. Not even investment professionals, but also lawyers, doctors, architects. So how do you envision, Samir? How can we transform society in such a way that we are encouraging financial education at the school level?
I do love a question that asks, how do we transform society, and gives Samir potentially 2.5 minutes to answer, but go for it, sir.
Well, I better not be mentioning age and putting toothpaste back in the tube at any point. But I think, Marcelo, first off, that's a very thoughtful and excellent question. And it's a challenge that education institutions and schools face. Theory and practice. In theory, there's no difference between theory and practice, and in practice there is. So how do you take knowledge at a university, at a school, and make it applicable? And I think ultimately you have to relate it to dreams. Hey, you're someone young. You are today's graduate. How can you become tomorrow's leader? And people have dreams. They maybe want to be an entrepreneur and they want to own their own business. Maybe they want to be an executive. Maybe they want to be a politician. Maybe they want to be a singer. And you have to help them understand that in order to achieve that success, they're going to need a base level of financial literacy. And if you make examples and you showcase people who have done great things in their life, and they've been able to achieve that and continue that and make their family, their friends, they're proud and achieve their dreams because they've had a foundation in financial education. Ultimately, that's how you're going to be able to connect with young people. And that's one of the core elements, I think, of being able to address a young group, is being able to make things relatable and help them see that, hey, you know what? When you connect knowledge and you take, you know what, you're saving, you're spending, ultimately, being able to put some of that money away is going to allow you to do the things that you dream of.
Samir, right at the very end there, you mentioned savings. Am I right? Would that be the silver bullet when it comes to financial planning and doing things right? What is the first step on the road to learning how to save? Is there a framework, or is it you're born with it and you know?
Well, I think, Emil, you are absolutely correct. And I think you really answered your own question in that saving is the first step to financial literacy. And isn't it interesting that there are people that earn perhaps $50,000, $100,000. They're able to save several $1,000,000. And we've had clients and we've helped people that are earning well into six figures, $500,000, into seven figures, but they're spending just as much. They're perhaps spending more. So I think that if you want to ultimately have a certain lifestyle, you have to equate your decisions now, what you're earning, what you're spending, and you have to relate that to what you want to accomplish in the future. And of course, the first step to that is disciplined savings. One of the easiest ways to do that, Emil, is to pay yourself first. Hey, you're receiving a salary, you're receiving an income. Make sure you pay your savings and put money away before you're thinking about going out to eat 4 or 5 times a week, before you're thinking about planning that next vacation, before you're going to the mall and outspending yourself.
I love that. So you take a certain percentage and you just sock it away to a different bank account, not your checking account. Is that right? How do you pay yourself?
Yeah, let me just jump in. So, talking about the topic on savings, I usually have like a 4-step process when it comes to advising clients on savings. The first premise being save early. The second one being save regularly. Number 3 being stay invested. And number 4, diversify. So if we apply this 4-step process about saving early, saving regularly, staying invested, and diversifying your investments, I think you have a pretty good recipe, okay, to really executing that savings culture with discipline over your lifetime.
Interesting. Now, the flip side of saving is debt. We talk about, well, lots of people go out, get debt in order to buy an asset. Is debt a bad thing, or is it something? How do you address the matter of debt and financing assets? What's your perspective on that?
Well, I think debt is something that is part of the financial planning process. And I think that debt allows you to buy a house, to buy a car. However, when you're taking on too much debt, Simon, Emil, relative to your earnings, relative to your savings, that's where people run into trouble. For instance, the difference between being able to buy a $500,000 house, perhaps, and a $5 million house, there is a difference in financial requirements. And if you extend yourself and perhaps are a little bit more conservative when you're borrowing money, that allows you to pay back that loan at an earlier point, have it under control, and perhaps later on be able to upgrade. So I think it's always important to exercise prudence with respect to taking out debt. And as we've seen through the financial crisis in 2008, when people overextend themselves, that's where there can be some challenges.
And I think one other thing, if I may, just to add to that, is that when people think about buying a house or buying any asset, in actual fact, what they also need to think about is not just the cost of the asset, but they need to think about the cost of owning the asset. Very few assets cost nothing to own for the future. You have to pay money to keep that asset at the level it needs to be in order to be usable. So a house doesn't just cost $500,000 to own; it costs $20,000, $30,000 a year to operate in order to be able to live in it with electricity, with gardening, whatever it might be. So those are also important points. Now, as is always the case, though, on Money Sense, we run out of time just as we're getting into the nitty-gritty and the meat of the matter. We always have too little time on this show. It has been a pleasure, though, Samir, having you on our show, and we've been delighted that you've hopefully enjoyed your time in Cayman and joined us here on Money Sense to give us your insight and your perspective. So thank you very much.
Thank you. Pleasure was mine.
And thank you, Marcelo, for joining us as well.
Thank you very much, Simon.
Fabulous. As a final note then, before we leave, I just wish to thank all our listeners for tuning in and remind you that today's show can be heard as a podcast on the CFA Society Cayman Islands webpage, and encourage anyone who has a question or topic they wish us to cover to please email us at moneysense@candw.ky, or for those of us who are technologically advanced, post us a comment or tweet at MoneySense Radio. We will engage with you on conversations on both those areas. So with that, thank you once again, goodbye, and please do tune in to Money Sense again in 2 weeks' time.